What will 2024 bring? Will it be the recession that has been long called for? Will it be a Goldilocks economy? Or will we get the dreaded reflation? We're going to have this conversation with the one and only Taylor from Life Goal Investments. Man, how you doing?
I'm doing great. What I'm not going to do here is look into my crystal ball and tell you exactly what's going to play out because I am not smart enough to do that, nor do I think anybody is. But when you think about things from an investment standpoint, the three portfolios you would build based on these three different economic scenarios are so vastly different that I feel for retail investors as they look at this upcoming 2024 market and go, where the heck do I invest right now? So yeah, I think you've hit the nail on the head. So we can kind of knock off these three scenarios. I guess I'll start and say, let's look at the one that seems to be playing out in the market right now or being priced in the market most massively right now. And that's the Goldilocks type environment.
Okay.
So in Goldilocks, what you see is relatively strong economic growth or GDP and low inflation. And really, this is just a continuation of what we've had in 2023 for the most part. You just saw the third quarter. We printed a massive 5.2% GDP growth number, which nobody could even come
that
up
was
with.
Not on my bingo card. I did not have
I
that
don't
on
think
my
that was
bingo
on
card.
anybody's bingo card. And simultaneously, so you have that strong economic growth on one side, and then simultaneously you have inflation, core inflation, that's continued to move down throughout the past year.
Well, let's try to put some numbers on this. So Goldilocks, I'll put out some numbers and you tweak them.
Yeah.
So on a GDP print, Goldilocks would probably be like 1.5 to 3% GDP growth. Does that feel right?
Yeah.
Let's start there.
Right in line with historic norms, really.
Yeah, right in there, right? 2% plus or minus. And then what we're going to probably have to see is inflation coming down slowly to, and we're talking CPI headline, so we don't get people confused, low twos, something like that.
I mean, the Fed is vehemently saying we're going back to 2% inflation. Whatever happens to the underlying economy along the way is what happens. And obviously they've done a masterful job thus far, but as they say, and as we know, there are lagged effects to interest rates. And when you yank interest rates higher in short order, like they have 5.25%, at some point we pay some reckoning potentially, but the market right now is pricing the fact that really we don't in any meaningful way.
The last one kind of on the Goldilocks is we probably have to keep unemployment below 4.5, 4.8, something like that.
Yeah, I think that's a fair assessment. Call us at 3.5%, somewhere in that part, 3.5 to 4% now. So you get another, 50 basis points of increase somewhere in that ballpark. And I think that's relatively tame. But when you look at stocks right now, the average analyst expects 12% earnings growth in 2024. And so, I don't even know if that's Goldilocks. Isn't that even better than the, GDP of it's something, it's something pretty substantial in order for us to get 12% earnings growth on S&P 500 companies.